Good morning, good afternoon, good night. Welcome back to another schema scalper video. Today is going to be a market study and pattern recognition video. We are going to be looking at inversion fair value gaps. So how I classify inversion fair value gaps, I don't know if I can see one now, is it's going to be a fair value gap with perfection attached. And by perfection I mean a candle to the left or right of it where the high and low line up perfectly. I'll show you guys an example if this doesn't make sense in the way I'm explaining it now. Yeah. Like here for instance. Right there. This low comes in at 15,464.4 and this high, this candle comes in at, this low comes in at 15,450.1 and this high of the candle comes in at 15,450.7. So there's a 0.6 difference in the price delivery of this, the low of this candle and the high of this candle. I usually have a tolerance of about 0.75 points. That's my tolerance. If it's larger than that, then I don't consider it a perfection. And it's a three candle pattern, so 1, 2, 3. You can see this one also has perfection with a fair value gap, and this is how you classify it. So it's perfection is number 1. Number 2 is it has to have a fair value gap, and then number 3, the market has to trade above the high of this candle for being a bullish inversion fair value gap, and for bearish inversion fair value gap we need a perfection. I'm actually not going to look for one now because you'll guys, as the video goes on, you'll see it and we'll take note of it. To be a perfection fair value gap, run on the high of this, and then this will be extended out into time, this fair value gap, and we'll see how it trades after that, as well as this one. So these are, that's why if you've been watching my videos, I always say possible perfection, because sometimes it goes above, comes back down below, and then goes and rallies up and then respects that perfection fair value gap. And the way this is invalidated is when the low of this candle gets taken out. I look at that as an invalidation. So if this high is taken out, it comes back into the range, and then this fair value gap, I'm just going to mark it up here, let's say this one, this fair value gap, the high gets taken right there, and then the low gets taken. Once this low is taken, after the high is taken, that's invalidated. So I would look at it, I would still keep it on my chart as a possible inversion fair value gap going into future time, but I would be out of the trade if that was the idea that I entered on. Make sense? Yeah, okay. We'll go on. I'll have a little checklist up here somewhere maybe, and we're going to be looking at the week that passed, actually the week of the 24th of July until the 28th of July, all on a 5-minute chart. We're going to look at every candlestick printed this whole week, and we're gonna look for areas of perfection, fair value gap, and then market respecting that in the opposite direction. So why I say it's inversion fair value gap, because usually this would be a SIBI, sell side imbalance, buy side inefficiency. But once that I gets taken out for the perfection, I look at it as not just a run on stops, but an actual reversal of positions. Okay, let's get into it. So we are starting replay feature. I'll just start after that fair value gap. So now I'm gonna extend this out into time. We're just looking at the reactions for now, if it holds or if it just falls through. Guys, I will be missing some fair value gaps like perfections, some inversion fair value gaps. Not not purposefully. I won't do it purposefully, but just human error. So if you guys can do this alongside with me, that would be amazing. So right now I'm looking at this, still this area, and what I usually do is I'd look at 40 bars into the future for this pattern. For this area still to be valid. I should have marked up this area as well. I'll just do it now. And you see the high of this candle hasn't been taken out yet, so I wouldn't classify it as a fair value gap, inversion fair value gap yet. So once this high gets taken out, then I'll be looking at this area. And in terms of the high being taken out, I don't expect it within a certain amount of time. So even if it gets taken out a week from now, or no, okay, not a week, 3 days from now, and this high gets taken out, I'll still look at that as an inversion fair value gap. I saw another one now. Let's see if this fits. I don't think it does. to make it easier. Let's see, measure 1 point. Is a tough one. That low is taken out. So now the reversal inside here, I'd expect the reaction. Could actually extend this out as well. Got a fair value gap. Let's see, that's perfection. That is perfection. So I'll be looking at this as a inversion fair value gap. This is how it was taken out. Now let's look at the reaction if there is any. Okay, it gets invalidated here. At the end of the day, it returns back into the inversion fair value gap and moves away. So right here is another one. I don't know if it overlaps. And that's also the thing, is you have to make sure that these levels actually overlap. There's no like there's not a very small gap in between. Let's look at the high, 15466.6, and this low, 15466.66. Okay, so that one, this is now inversion fair value gap after the low's been broken. So we've got another fair value gap. Nothing else in this range. Here's another one. This low hasn't been broken. So this is possible. Version fair value gap. Let's check the difference. What does this high come out at? The high is 15,512. 15,512.8. So that's 0.8 points difference. I'll take that. So this, after that low has been broken, that's a possible inversion fair value gap for this low. And then this low. And by taking, I mean at least 1 point. The market has to trade at least 1 point below. So for this, I wouldn't say this one was taken. This low, 15466.4 and 15466.6. That's 0.2 points difference. So that one didn't activate the inversion fair value gap, if I could say it like that. Okay, there we go, activated. I'm watching for reaction. Okay, there we go. It is now invalidated because this high was taken out. So there was a reaction. Okay, it was 12 points. I'm looking if there's any more now that maybe I missed. For instance, I missed this one. This one is not because there's a gap, very small gap, but there's a gap. Inside here, very small gap. Let me check that price difference. The low of this candle comes in at 15,498.6. You can see it up here. And the high of this candle comes in at 15,498.6. 15,498.6. That's perfect. Okay, so that's another one. Perfection. Inside here, but it got activated, invalidated almost immediately. But we could look at this area for the future now. Could be reactivated. So let's see the difference between this. This low comes in at 15,491.6. This low 15,490.6. So that's 1 point difference. I'd say that's activation. And now, as long as it doesn't take, I'll move this line over. The high of this candle, I would say it's still valid. And now we're coming back to this possible inversion gap. Ooh, big reaction. Invalidates this one. Tuesday 9:30. What news event was there? I'm just checking my economic calendar. Factory. Tuesday 25th of July. $9 there was a news event. So yeah, there's a news event. And then there's another news event at 10 o'clock, 10 a.m. Okay. So that gets invalidated. And now I actually missed one, but now I'm seeing it. Right here, the low of this candle comes in at 15505.8. I have this candle 15505.8. Another perfection. Perfection. Inside here. I'll just move this one, make it small. Got invalidated, activated, invalidated. So let it in here. So I'm going to activate it since the low was taken. No, sorry, the high was taken here. Activated. Still, no, I think the low was taken as well. Yeah, invalidated as well. Activated and invalidated. Yeah. This one now got invalidated. I'll actually move the ones that are invalidated. This one, invalidated, invalid. I'll remove this line as well. So there's two more gaps, inversion gaps that's down here. I'm looking at for the action still. Inside here, no, small gap. Small gap. No more fair value gaps that I see. This one obviously, but no perfection. Right, nope, no perfection. Fair value gap, no perfection. Fair value gap, perfection. This high comes in at 15542.1. This high comes in at 15542.8. 0.7 point difference. So now this is now inversion fair value gap with this low and this high being of importance. So once this high is taken, I'll look at that as activation, comes back in. If it goes below this low, it's invalidation. So the high was taken here. So it's now valid. Oh, I'm not looking at more. I should actually be looking for if there's any other areas. No, not seeing any other areas. Okay, there you go. This low comes in at 15558.1. This high comes in at 15558.2. Perfection. And now inside here, inversion fair value gap. Actually, here as well. This high comes in at 15556.3, and this low comes in at 15. Oh, sure of that. The low 15564.1, the high 15564.3. Another imperfection. Version fair value gap. Version fair value gap. So once this low is taken, it's validated. Once this high is taken, this one is validated. Or activated. This low gets taken, and this high, let's see the difference. The high 15506.6, this high 15558.7. So it's activated. So I'm looking at that action now. The reaction into here, and then also the reaction in here, because this one is also activated now. But if it goes above this, so this one is activated for sells, this one is activated for buys. And this has been activated, invalidated, because it went below the low. So this is removed, not of importance. In this one, activated, back into the range, invalidated. Delete. Fair value gap, is that perfection? Let's see. This high comes in at 15579.3. Low comes in at 15577.9. That's too far. So this I would ignore. No fair value gaps. Inside here's a fair value gap, no perfection. Go on. Fair value gap, no perfection. Perfection, no fair value gap. It's a low, invalidated. Let's check this low. 15504.7, this high 15545.5, 7.5 at 0.8. And then this becomes perfection. Perfection, fair value gap. There's another fair value gap here without perfection. So once this high gets taken, and this, I'll look into this area for buys. Fair value gap, no perfection, because this is higher than that. Fair value gap, no perfection. Yeah, it's validated, activated, sorry. And this low is of importance. Invalidated, just went through. I can delete this, delete this. Here's another perfection. So once it breaks this high, I have this candle. This area would now be sensitive or of importance. Okay, activated. Let's look at the area. Perfection. And it gets invalidated immediately. Perfection, yeah. You can hold the notes. Oh, right there as well. Sorry, I'm late. I'm late. This one got invalidated. Let's look at this high. 155563.4. 155563.6. It's another perfection. This whole area. Gets activated, comes back into it. Now this one gets activated as well. Oh, it was active, just going back into the area now. Gets invalidated. Another one. Perfection. Let's see that low. 5544.1. 5544.1. Only when this high gets taken, this area will become of importance. Inside here is that, let's see, that low comes in at 5 to 8.5, 15.5 to 8.5. That low comes in at 15.5 to 8.4. That is not a perfection because it didn't actually equal the lows. So it has to be equal or greater than up to 1 point. I'll change it from 0.75 to 1 point. Because that's what seems on the 5-minute chart as what's important. Inside here, slow. Low comes in at 5 to 7.9. This low comes in at 5 to 8.5. So that is perfection. Close to perfection. And then inside here, once this low is taken, which gets taken here, taken, and then area comes back into it. And almost invalidates it. 1.4 invalidation. What's that? 36.9. Three 7. And yeah, let's see this is. This high comes in at 25.4. So this is 1525.4, 1524.1. That is too far away. I won't deem that as perfection. Okay, let's see this one. That low comes in at 15,521.6. High comes in at 15,520.3. It's 1.3. It's too far. This low 15,512.3. The high 15,12,513.3. So that's on the edge, just on the edge of perfection. So this would now be it's still not been activated. This is now a new perfection area after the low of this candle gets violated. Okay, that's now area of importance. And it gets violated. And guys, sorry, ladies and gentlemen, guys and girls, if you see this inversion fair value gap, it's not a standalone, let's say, pattern. It could be a standalone pattern, but a lot of times you'll see things line up with this. So this area will now be looked at as like a selling area, but there's this order block in here with this intermediate swing high, It's filled in the fair value gap. So this swing high is now of importance. So it could go into 50% of that order block. It's up here and then return down, take out liquidity below. So these things, the inversion fair value gap might be invalidated, but the market could still move down. For instance, in this example, this one is invalidated. This one is still valid. Yeah, still valid. And that's what I mean. Oh, you didn't invalidate both. Ooh, that one's invalidated. Let's mark it up actually. Invalidated. Invalidated. This one activated, invalidated. Remove this. This one is invalidated. Wait, my laptop is freezing. Not a good sign. So this one looking for buys. Yeah, freezing. And that seems like where we're gonna end the video today, guys. Let's see how far we got. Jesus. Okay. Reset chart view. So this one is still active, wasn't invalidated yet. So we got activated there, and I'll bring it all the way across to where we are now. So we could be looking for buys in this time. Just wait for the laptop. I think, yeah, this will be the last day, so I'll do then Monday, Tuesday, Wednesday. Monday to Wednesday. And look at all the 5-minute perfection fair value gaps. And then I'll look at Thursday and Friday on my own, and I expect you guys to look at Thursday and Friday on your own as well, and also go into lower time frames and mix these ideas with power of 3, overlapping fair value gaps, breaker, breaker protection projections, actual breakers, see where the A, B, and C legs fall within this, and have this added to your arsenal. If the recording, yeah, I think the recording's still going. So that's now activated, and we'll look at the reaction here. Oh, that's terrible. That is terrible. Reaction was good. The reaction was good, but the market, what my laptop is doing, is just terrible. I don't think I want you guys to stay for this. Do self study. So we've done Monday and Tuesday. Looked at every 5-minute fair value gap that I had the perfection on it. I'll look at Thursday and Friday on my own. Yeah, have a good weekend. Don't be too lazy. Weekends are for revision. Cheers, guys. Be safe out there, and yeah, cheers.